Small-scale farmers who are battling the ravages of drought, floods and desert locusts. Pula Insurance, a 5-year-old Kenyan insurance technology startup, offers coverage to help small-scale farmers manage the risks of extreme weather conditions. Here is that story.
Meet Waki Munyalo, a farmer from Kitui County. Her crop of lentils had shrunk by 3/4 last year because of unusually low rainfall. Disaster was, however, averted thanks to a simple remedy that was previously unavailable to most farmers in the country and across Africa: insurance. Munyalo, a 38-year-old mother of 3, had taken out an insurance policy with startup Pula, which aims to reach a vast, untapped pool of farmers grappling with new disruptions linked to climate change. Munyalo made a claim on her Pula policy and received a compensation payment of 12,000 shillings, which meant she could afford school fees for her youngest son. Without the payment, he would have had to drop out of school. The weather patterns have really changed lately, especially rainfall. In the past, the rains were enough to produce a good harvest. The rains come and disappear for about 3 weeks, then the crops just wither and die. Farming is the biggest contributor to many African nations' economic output, including Kenya, where 600,000 farmers have taken out policies with Pula in the 6 years since it launched. Key to the insurance company's success is affordability, where the farmers can insure their crops for as little as 500 to 1,000 shillings.
We are trying to help them by distributing insurance products that will enable them to fight advanced climatic changes, things to do with rainfall, whether it's excess rainfall which causes the flooding and hailstorms, whether it's less rainfall which causes drought and causes plant loss, things to do with desert locusts, which of late has been a nuisance to farmers and bringing a lot of loss to farmers, also covering things to do with anything that is a natural calamity that's likely to affect the farmer.
Across the African continent, small-scale farmers who collectively are crucial to feeding the continent are struggling to cope with the impact of climate change on weather patterns and land on which they depend. Those challenges, combined with the spread of mobile phone technology, have created the conditions for Pula's rapid growth. Looking beyond Kenya, the company has already signed up 4.6 million farmers in Nigeria, Zambia, Ethiopia, and other African countries. Chief Executive Thomas Njeru co-founded the company in 2015 with Dutch entrepreneur Roos Goslinga after the pair spotted a gap in the insurance market. Because of climate change, farmers are having to contend with unpredictable rain patterns, frequent droughts, and even the emergence of new pests and diseases.
Key for us is to one, as I said, achieve diversification, demonstrate that this is actually something we can do at a global scale, to enable us to reach our goal of reaching at least 30 million farmers in the next 2 to 3 years, spread across the 3 continents, Africa, Asia, and Latin America.
Njeru adds that to sustain its business while keeping premiums low, Pula uses a mobile phone application to register users, machine learning algorithms to cluster farmers whose land have similar characteristics, and digital tools to assess claims in the field. Pula also aggregates demand for farm insurance, serving banks, traditional reinsurers, governments, development agencies, and even fellow tech firms like Safaricom, which has its own platform for farmers. For that service, Pula does the actual risk analysis, insurance placements, and negotiations along the physical assessments in the field. In January, Pula raised $6 million in a funding round led by London-based TLCom Capital to invest in new markets, strengthen existing products, and design new ones. In Kenya, the company has branches in Kirinyaga, Nairobi, Kitui, Laikipia, and Naivasha, with plans to venture into Brazil and India. Ruth Mulandi, TV47.
Elsewhere, Mbeere South Member of Parliament